What happens to employee deposit linked insurance scheme on death of the investor? That's what we are going to discuss today in the Market Secrets investment series. Before we get started, I'd like to mention that we at Market Secrets had recently launched Algo Traders Program ATP. If you are someone who is interested in learning end-to-end algo trading, then you can consider joining our ATP program. I'll leave the link to it in the description section of this video. And with that note, let's jump into today's session on EDLI, Employee Deposit Linked Insurance Scheme. Okay, so what happens to EDLI subscribers when the investor dies or the subscriber dies? But before we go to that particular process, we need to understand what are the documents that we would need. One is death certificate of the EPF subscriber. Okay, EDLI is also part of your EPF. So your EPFO subscribers death certificate. I mean, whoever was the initial subscriber, right? Their death certificate is needed, and birth certificate of the claimant. Okay, so this is to prove the age of the claimant. Okay, they should be above 18 years of age. So birth certificate or any other age proof is more than enough. And bank account proof, that is a cancel check or passbook of the claimant. So that's the next one. And you need to provide Aadhaar number of the claimant and photograph of the claimant and form 5IF. Okay, so this is a form that should be filled by the claimant and it should be submitted along with all other necessary proofs. And lastly, you need to provide succession certificate. Okay, so this is nothing but the legal hire certificate, or you can give court decree. So these are the documents that needs to be produced to claim EDLI. So let's understand more about EDLI claim process. Okay, so first thing, EDLI, that is Employee Deposit Linked Insurance Scheme, is an insurance cover available to all the EPF members. So if you are part of EPF, you would have EDLI by default. Okay, so on an unfortunate death of the EPFO subscriber, family gets insurance up to the maximum of 7 lakh rupees. So that's the maximum amount that a family can get on death of the subscriber. Okay, so nominee for EDLI will be same as it is for the EPFO account. So if you have an nominee for EPF account, then same will be applicable for EDLI account as well. And the condition here is that members should have died during the service period. So that is one of the conditions for this payout. And minimum amount that will get is 2.5 lakh if the employee was working, that is if the subscriber was working in the last 12 months. If they have provided continuous service for last 12 months, then the minimum assured amount will be 2.5 lakhs. Otherwise it might go lesser. Okay, and your employer should have been part of EDLI. What some employers will do is they will offer similar insurance scheme outside the EPF. So, that is also allowed. So they should offer similar or greater insurance cover through group policy. If employers are doing that, they can be exempt from EDLI. Okay. So now who can claim the amount? Either nominee or legal heir can claim the amount by submitting the documents that I have mentioned. Okay, so they need to submit the form and proofs that I have mentioned to claim this particular amount. So if you're not sure whether your employer is part of EDLI, then you can check your EDLI coverage in your EPFO passbook. Okay, so if you want to check about the claim amount or whether it is there or whether your employer is providing separate group cover, if you're not sure about your EDLI account, then you can check your EPF passbook to understand your EDLI cover. So this is what happens to your EDLI scheme or EDLI account when the subscriber dies. If you have any queries around this, let me know in the comment section. Also hit the like, share and subscribe buttons if you find this video useful. Thank you.